Shares of HSBC and Standard Chartered have plunged to 22-year lows, and the fall comes after media allegations that both of those banks are among a group accused of moving more than $2 trillion of dirty money. Now, the alleged activity is said to have taken place over nearly 2 decades. It's claimed that the banks knew of red flags that had been raised over the money's origins. The accusations are based on leaked suspicious activity reports filed with the US financial crimes watchdog. HSBC shares declined 5.3%, hitting its lowest price since 1995. The stock is down more than 6% in London trade this hour, and it's already the worst performer on the Hang Seng Index this year. The sell-off has been fueled by China's Global Times. That's after it reported HSBC could be one of the first firms to be named on Beijing's unreliable entity list as part of a tit-for-tat standoff with several Western countries. The report points to HSBC's participation in Washington's investigation of Huawei and the arrest of Chief Financial Officer Meng Wanzhou in Canada. Penalties could include restrictions on trade, investment and visas. Meantime, StanChart has lost more than 6% in Hong Kong trade. It's down more than 5% in London. And in response, HSBC says it's on a multi-year overhaul of its ability to fight financial crime. StanChart says that it has invested substantially in compliance programs. For a closer look, let's talk to China specialist Andrew Leung for more. Andrew, how would Chinese sanctions affect HSBC's businesses and prospects?
Well, as 80% of HSBC's profits come from Asia, and of course China's very, very big in Asia, and now listing HSBC as an unreliable entity, of course, would have a huge impact on not only the immediate profits, but on its profits in the near future. In this very vital region. Don't forget that China is at the heart of Asia's economy, and this linkage is even more going to be more enhanced when the world's biggest free trade agreement, the regional comprehensive economic partnership, including all the ASEAN countries and their trading partners. This huge free trade agreement has been progressing quite well, and is expected to be in place in a year or two. And then there would be a huge market, and obviously by being included in an unreliable entity list, of course, doesn't augur well for the future of HSBC in this vital region.
Andrew, the bank has indicated it is on a multi-year journey to overhaul its ability to fight financial crime. Is this enough, though, to regain its footing?
Well, the relationship with China is not just fighting, sort of dirty money, as it were. It's a lot of geopolitics involved. For example, the relationship with Huawei, for example. China has seen that HSBC is trying to play politics with China. So this is another dimension of the kind of relationship big banks have, not only on the important issue of dirty money, but also on geopolitics and relationship with the sovereign countries in one of their largest markets. And China, of course, is extremely sensitive. At the time of a 360 degrees pushback by the United States against China on trade, technology, finance, and so on and so forth. So being caught in the crossfire is not a very, very smart move for HSBC.
This isn't the first time, though, that these two banks have been in, hot water because of this type of activity. They were fined huge amounts back in 2012 for the same reason. Banks face financial crime, trying to sort it out all the time. So what can they do to stop transfers of so-called dirty money?
Well, there are several dimensions here. As you pointed out, there's a big issue about money laundering. this has become a global imperative. So I think that both banks have in fact been fined hugely in recent years, and there is no doubt they've got to clean up their act on that one. And on the other side, that there is increasingly intense geopolitics at play, and this is almost a kind of epoch-defining kind of dynamics with the pushback by the United States against China on all fronts, and the whole world supply chain has been turned upside down. Now, even targeting finance and also technology is not going to limit that kind of impact, because with the supply chains being disrupted by this anti-China kind of move by the United States, it's going to affect other businesses as well, because China is embedded in many different sectors, not only in just trade or finance, but also in production of many products, is supplying various materials. And in fact, countries, even if they are producing certain stuff or certain components, China's embedded in it somewhere. So I think the impact of this China dimension is not limited to finance or technology, but actually is going to affect other fields. So the other lesson to be learned is that not only the importance of money laundering, but also the importance of geopolitics. I think the smart money is not being caught in the crossfire. It's got to be very, very important to be sensitive to the kind of red lines of the biggest markets they're dealing with.
Mr. Leung, thank you very much for your perspectives this evening on this story. We've been speaking there to China specialist Andrew Leung in Hong Kong.